So, should we buy or sell this international dividend ETF? First off, read this disclaimer carefully. And do your good deed of today by liking and subscribing. So, we find it under Fixed Income 360 right here, and we go to dividends. So this is a global dividend ETF, 8.6% from the 52-week low, and we have seen, a 5.6% pullback so far. IDV is the ticker. International investing is, more interesting at this point, given that we have a lot of idiosyncratic issues with a bunch of different countries. And another thing is that the best thing, historically that's prevented most wars is actually economic interdependence. So yeah, so this is almost like a peacekeeping ETF. Okay, we do see here on the weekly data points that there are these time cycles. There's also a pretty clear tendency for there to be these head and shoulders patterns within. So let's actually draw that like that. So you can see head and shoulder, left shoulder, head, right shoulder, left shoulder, big head, right shoulder. And then maybe this is a left shoulder and that we are going to form a head. It's possible. The thing is that it's also possible that, let's draw that in, maybe this here is the left shoulder, this is a head, and this is a right shoulder, but that sort of is a very strange head and shoulders pattern. Anyway, it is pretty clear that head and shoulders matter for this ETF. The interesting thing is that very few of the head and shoulders played out in any classical sense. You have this typical, well, you have that situation where it's around the neckline, right here, that you can all of a sudden get horizontal support. And that is very relevant if we just very quickly look at the S&P 500. Okay, so that is completely invalid symbol. So here I was able to get the S&P 500. So on the S&P 500, we definitively have a head and shoulders pattern. So let's draw that in. We have a left shoulder, we have a massive head, and maybe we are forming a right shoulder. But as we saw, the problem with the head and shoulders is that we do get, well, the problem for the bears is that we do get horizontal support around the neckline. Anyway, the reason why this ETF popped up on my radar is because we have an event. We have an interesting technical pattern, and that is this. We have an inverse head and shoulders pattern. That is a key technical pattern that is bullish. What is especially interesting about this inverse head and shoulders is that we do have some corroborating data that could help the bulls. So yeah, here are the weeklies. We are bouncing a bit here from the green 50-week moving average, which we see has been relevant recently, like here and also here. So it's obviously something that matters for the bulls. That is something that could entice them to buy. On the daily data points, we have the red 200-day moving average coming in here. And we also have the 50-day pointing sharply upwards, which means that a golden cross is right around the corner. But we do have a death cross back here, which means that these kinds of crossovers between these two moving averages, due to its frequency of happening, it loses legitimacy. Let's quickly look at these other indicators. So yeah, like that. We did get a buy signal here on the MACD. Accumulation distribution is bullish. In terms of the PPOs, we don't have any really extreme readings historically. The distance from the red 200-week moving average, it is a bit on the higher end of the spectrum, but we have been much higher in the past. So it's not like some screaming overbought risk signal. In terms of the daily RSI, we have pulled back to a level that has triggered some rallies in the past, like back here and here. Yeah. In terms of the PPOs, we are relatively in the modest territory. So in terms of this ETF, I think that the line in the sand here is inverse head and shoulders. So let's just do it like this. That is, it's a bullish technical pattern. And that is the key part of the bullish thesis. In terms of the technicals, to give it a bit of an overall score from 1 to 9, Yeah, I think I will give it a 3. So yeah, feeling a bit bullish, but it's not like a super bullish setup, but it's decent. Next, we will look at seasonality. So here we have the seasonality. To the right, we do have these averages over the last 5, 7, and 10 years. So from the current point, we do see that there usually is some decent seasonality. We do tend to rise here towards mid-March, pull back a bit, but the level we usually pull back to is usually higher than where we are now. And then we do see that the seasonal strength really gets going across all time frames, heading here towards 11-ish of May. So that is bullish. To the left here, we also get seasonality data, but sort of like a bit of an X-ray of what we have to the right. So over the last 5 years, we do see that February is, it's a bit mediocre. March is weak, but April is extremely strong. Over the last 10 years, we do see that February and March are a bit helter-skelter for the bulls, then April is super strong. But when we then look at the last 16 years, then all of a sudden we see that the seasonality strengthens from January towards and peaking around April. So the seasonality here is bullish and corroborates a more bullish thesis. So let me give then a score for the seasonality. So yeah, I'm feeling a bit bullish here, but it's not like super bullish, but it's more bullish than bearish. Yeah, I think I will give it a 4, which is decent. It's a decent bullish seasonality. Next on the list, we will look at fundamentals. I am now comparing the iShares International Select Dividend ETF, the IDV, against the VIG, which is the Vanguard Dividend Appreciation ETF, which basically is like an America dividend ETF. You see here that the expense ratio is substantially higher for IDV, which is relevant. When we look here at the performance, we do see in terms of beta that the American dividend ETF is actually slightly less volatile. Looking at price earnings, then IDV is almost like, well, let's actually do the math on this one. So we do it like this, and then we do it like this, and then we do the math, so we get the accurate number. So yeah, the price earnings is minus 54%, so more than half. So there's far, far, far more value in the international dividend stocks than what we have in America. Looking at the dividend, so we have 5.5% yield versus 1.5 for America. So the IDV, it is truly a dividend ETF. This American version, 1.5%, that's ridiculous. How can you even call that a dividend ETF? I mean, that's ridiculous. Looking at the holdings, then you can see, the holdings, of course. Here you can see the sector breakdown. We are very tilted towards finance in the international version. Then we have utilities. So finance is interpreted as a bit more risky, but it is actually good to see that utilities is number 2, because utilities is like the ultimate non-risky sector. So you could argue that they sort of offset each other. So the sector structure here is actually very good. This is the kind of stuff that a dividend investor will look for. When you look at America, so finance is on top, consumer non-durable. That's also that is like a classic dividend play. But then you have retail, health tech, electronic technology, and tech services. Those are not really classical. They're not the kind of sectors that the dividend investor are that attracted to, because the dividend investor is not simply someone who wants yield, it's also a personality that likes reduced risk. When we go further down here and look at the market cap breakdown, you see that a bit more mid caps here in the international one. In terms of regional breakdown, we have far more diversification. We have some 60% Europe, then 29% Asia Pacific, and here you can see the countries: UK, Canada, Hong Kong, Spain. We do not, we do have Finland, but we don't have like any like really Eastern European countries. Okay, so in terms of the fundamentals, I do think that I will give this a bit solidly to the bulls. The yield was amazing. Price earnings was also really good. The sector structure was really good. So in terms of being what you are looking for, in terms of like a dividend ETF, this one really does the job. So even though the expense ratio was definitively much higher than what we saw with the American dividend ETF, I mean, I think I will give this actually one. What will I give it? Maybe I will give it even a 6 here, actually. So it's pretty good on the fundamentals. Next, we will look at relative performance. So we do see that there's a 46% correlation with the S&P 500. There's 47% with the American dividend ETF. And then there's 54% with the total stock market ETF, the VT. And then we have minus 28% with the dollar index. Daily data points, minus 28% SPY, minus 18% VIG, minus 19% VT, and then you have minus 36% with the dollar index. So looking shorter term, you do see that the correlations here have disconnected. So there's a difference here between long term and short term. The strongest correlation we have long term is with the VT. So let's look at the VT here, like that. Then we do a quick technical analysis of VT. This is the total world stock market ETF. So in this case, we do have an ominous technical pattern called the rounding top. So that is not good. The caveat with the rounding top is that it usually is formed like this, like up and down, 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 which means that given that we recently have seen a pretty substantial pullback, there's a high probability that we will see a rally. Of course, the rally could simply be a part of the downtrend, but a rally is a rally. So yeah, short term you could make a case for the VT, but long term this rounding top is very nasty. So here I am looking at the international dividend ETF against the American dividend ETF. You see that for a long time we have seen that international dividends have massively underperformed American dividend ETF. There is a big but actually, so let's draw the but in. This is not in any stretch of the imagination a clean double bottom, but we do have a bit of a double bottom-ish pattern. So let me draw it in. So you have this bottom here, and you have this one. It is higher than the right bottom, so it's not by any stretch of the imagination a clean or technically correct double bottom. But you do see that these bottoming formations have improved. Because if you look at some of the previous bottoms, like here you have a key low, and then you have a key low here. That one is way more bearish. So sort of like this one, it is not like a clean double bottom, but you see that there's been improvement. The left and the right bottoms are starting to become more aligned, showing that there is some sign of a shift here in favor of the bulls. Okay, so let's look here at the seasonality for the pair. Yeah, the seasonality here is, yeah, let's look at it. It's not really that, it's a bit messy. So overall, it is actually more beneficial here, as you can see, to... Yeah, so basically, the tendency is for the international dividend ETF to weaken against the American one. That seasonality was to be expected given the massive downtrend we have seen. So let's look at the IDV against the VT. So in this sense, we have seen a very substantial downtrend. The bulls are fighting a bit vigorously here. You can see that it's been a fierce rally. If we draw in this formation, we do see that we are testing some very key resistance levels, like here, and also these three highs here. If we do get a breakout, that obviously would be pretty good. So let's see if the seasonality increases or decreases the probability of a breakout. So here you can see the seasonality of the pair, and yeah, we do see that the seasonality is rather favorable to the bears, meaning that the international dividend ETF tends to weaken against the total stock market ETF. So the seasonality does not suggest that we will have that breakout. So in terms of relative performance, we have seen a very substantial downtrend for this ETF against, the alternatives. So the bulls have a lot to prove. We have, however, seen improvements in the pairs that we haven't seen in a long while. So the IDV is sort of flirting with outperformance more longer term, but there's so much to prove yet that I will have to just in a tiny manner give this one to the bulls. So I give it just a 1. The bulls have so much to prove, but there's something, as you can see, I think you saw in the chart, there's something happening. So yeah. To sum up, so the average score here is 3.5, which means that I feel more bullish than bearish. And the maximum bullish would be 9, and the maximum bearish score would be -9. So yeah, I think that this looks interesting from a bullish perspective. We do have the inverse head and shoulders pattern here. That is, the technical line in the sand. If that pattern were to break, then the bullish thesis would be quite severely damaged. Whatever you do, of course, you want to use stops and be market neutral.